Good afternoon, traders. Welcome to this video. Today I'm looking at a stock called Circle. Recently had its initial public offering and was listed onto the New York Stock Exchange at the start of June. There's not a great deal of price action in terms of the chart, obviously because it's newly listed. So I've got a, very limited amount of data to work with. So you'll see on the screen, we have the conventional kind of looking chart here on the right, and on the left we have this chart, which is known as a TPO chart, which stands for time, price, opportunity. The reason I'm using this is just as a cross reference in between the two, because the TPO chart is just a way that we can visualize the distribution of the market over this time, and where we've had basically quite a limited amount of price action. It's just going to give us a little bit more information that we're not going to be able to retrieve from the conventional chart. Okay, so that's why it's there. I've already actually marked on the regular chart a couple of levels, and I'm just going to talk through what they are. So above us, if you're familiar with my work, I do use pivots. So you can see here we have freshly weekly pivots above us at $209, $218. Now, that could mean one of two things when and if they are filled. It could mean that we are going to come up into this area potentially, and maybe get a rejection once tapping those pivots to continue this move to the downside, which is what I would like to see. And the reason why I would like to see it is because we had the IPO at $65. We've had an all-time high at 300 or 299, and we've currently come down into this 180 region. Now, the 786, which is a level that's commonly used for retracements, meaning 78% of the value of this move up gets given back. Okay, if that's the case, then we'll be coming down to this 115 mark, which we have here. Now, if you look at these grey block boxes, you can see we have a gap in price at the 135, 140 level, and also the same here. So we have also this inconsistency here at $107, $108. Okay, now in addition to that, if I just turn this on, my computer's a bit slow today. We also have the fixed range. Okay, the fixed range, as you can see, we have the value area high of this complete range literally sitting on top of the $218 pivot there. So, and we also have down here the point of control, which aligns pretty nicely with that 786. So now we're starting to see like how we're getting kind of like quite a nice range being put in. Okay, so I'm not suggesting that, I didn't mean to do that, by the way, with the arrow. Let me just take that away. Which doesn't mean like we're just going to get one straight drop down, but it's just going to be price is just most likely just going to be boxed in between this level here, and below us down here at 150s eventually. So in addition to this here and the volume profile, the point of control sitting down at 786, I'm going to switch on these predetermined levels that I have here, which you'll see here says poor, high, and low. Now that's come from the TPO chart. So the TPO chart, as you can see on the left, so you'll see down here where it says poor, low. The reason for that is this basically means when price was coming down and there was an auction taking place between buying and selling, that it was incomplete. So this is basically where the market participants at the time didn't agree on a price. Okay, and this tends to occur when the trend either loses momentum or when one side of the market runs out of steam, essentially. So what that means when we see this on the TPO chart, as you can see, I've also got it here on the regular chart, is price can also be drawn to coming back down and essentially completing that inefficiency. So with the fact that I have down here the point of control, the 786, we have these poor lows, this leads me to believe that we have every potential to do something like this over time, which is essentially, whether we just hold on, that's better. Whether we just continue to do this, come into these weekly pivots, like I said before, get a rejection down, and then eventually come down to fill these gaps, correct this. Now, to correct that, you want basically to finish with a tail. So if we go back to the TPO chart, and I'm sorry if it's a little bit laggy, my computer's not performing too well today. You want to basically see a good tail like this. Okay, that's what these letters or these A's are showing you. As opposed to when we look for poor lows, we can see there is no selling tail. Okay. So with that said, I think that there is enough confluences sitting down here to expect price to over time come down into this 786 zone, and I think this would be a great entry with the data that we've got on the screen to potentially look for a nice long position in circle. With that said, also, you could also have a nice short as well, because if we come into this level where we have the weekly pivots and we also have this value area high, you have quite an easy stop placement, sitting above this 229 to 230 level. So, what's the worst that can happen? Your stop gets taken, but quite a good risk reward there, really, when you work it out. Pretty much, I think that's everything that I wanted to show you in this video. So this video is, not only giving you the perspective for a great long, it also opens the opportunity for a nice short. And like I said at the beginning, the TPO charts are a really fantastic tool. But in this video, I wouldn't really want to go into too much detail about them. It's much better for you to, probably use the internet and, go and watch videos, etc. The TradingView also have a video about TPO charts, which is really, really helpful. So I do encourage you to use the TPO charts in your arsenal of tools. And thank you for viewing today. Safe trading, and speak to you soon.